if you guys were, are doing in excess of $100 billion of revenue in 28 or 29, that you at least would be in position. What?
How about 27?
Yeah, 27, even better.
So you heard 100 billion potentially in revenues in 27 off of what's 13 billion roughly run rate. Oh, he says more now as well. But interestingly, just a lot of different things there. He did come back to the idea of going public, but there's no plan to go public at this point. It wouldn't appear. Certainly not.
Clear that. Right.
He
that
made
was the
that
first
clear.
thing.
And then getting back to where we started the show with McKinsey's report, they need compute from all places they can possibly get it.
But did you notice the change in narrative from Amazon? They emphasized over and over again their own chip, until last week when they said, listen, we have a lot of NVIDIA and we have a lot of our own chip. And then this is all about NVIDIA. We've got the NVIDIA. It's almost like they say, look, we've got the power.
Hundreds of thousands of state-of-the-art NVIDIA GPUs. I'm reading that from the press release, with the ability to expand to tens of millions of CPUs to rapidly scale agentic workloads.
Incredible.
And Carl, that's what we keep hearing about, of course, is these agentic workloads that conceivably will do your work 24/7, 7 days a week. So
this is, look, if you just wind the tape back a week, a lot of these companies were viewed as being trouble. NVIDIA, we were worried about China. Amazon, we were worried that they weren't spending enough and that web service was slowing down. Kennard, just wrong. I mean, Amazon just completely refuted that. The fair-haired child was Alphabet. Alphabet not mentioned today.
Although a bond deal announced.
A bond, well, that could be viewed as negative when you raise money, although it was a small bond deal. But just to go back, I talked about this with club members this weekend. 38% of the S&P is now made up of these stocks. And somehow that's supposed to be something bad. I mean, you could have sold these when it was 20, 25%, 30%. 35. It just doesn't matter. These are the companies that in the end go up when they make an announcement.
Well, how about this loop call on NVIDIA, Jim? 350, 73% upside would take it to about 8.5 trillion. What they're calling this golden wave of AI.
Look, there's been some misinterpretation of what the president said. He did say that NVIDIA is going to do business with China, which is important, just not necessarily going to sell the Grace Blackwell.
NVIDIA is up again, in part also the release from OpenAI is all about GPUs.
Yeah, and Amazon had many more GPUs than we thought.
Yeah.
Who knew that Amazon had all that?
Who knew?
Who knew? Not me, maybe Brad Gershon.
To your points back to the chips, I mean, a lot of bullish notes about NVIDIA. Target raised from 250 to 350 by Loop. Also some news that the U.S. is going to allow Microsoft to ship NVIDIA AI chips to the UAE for the first time. Not saying it's a huge market, but it's obviously an emerging market, one they weren't in before. And then it seems like these things with China are going to be resolved, Kate. I mean, overall, when we're looking at the idea of U.S. technology and the U.S. tech stack being around the world, the fact that these deals, sometimes small when we're talking about UAE, but bigger when we're talking about China, isn't that just another tailwind for this tech trade that makes it, quote unquote, more real, even though we have some people who are skeptical of some of these circular deals?
Look, I would approach the Chinese tech story a little bit differently, which is to say it's great if they can get some chips, but the bigger story, I think, from the last week and from the conversation between President Trump and President Xi was effectively that, hey, we're going to hold things steady for the near term. But the strategic competition between the U.S. and China is still very, very much in play. And in fact, we need to understand that in order to get access to the best technologies in the world, we need to separate out our investments in the U.S. technology stack and the Chinese technology stack. I prefer this kind of parallel, and we added to Chinese equities over the course of the summer.
Well, meanwhile, as OpenAI does continue to diversify beyond Microsoft, as she's pointed out, Microsoft today announcing a round of its own cloud deals, the tech giant signing a $9.7 billion deal with Australian company Iron and a multi-billion-dollar deal with cloud startup Lambda. Let's discuss all of it with Toney. He's founding managing partner at Plexo Capital. He's also a CNBC contributor. Lo, it's so great to have you here. I mean, Mac went through everything that OpenAI is doing. Obviously, now they are partnering up here with AWS for compute as Microsoft's right of first refusal expired. But it doesn't seem like Microsoft is going to be too poor off right now. They've obviously been making some of your own deals. Can you sort of size up where we are in this space right now? Is Amazon a clear winner over Microsoft, or is there enough for everyone to eat at this table?
I think there's enough for everyone to eat at the table. And, look, it does dilute Microsoft's exclusivity, but not the partnership itself. Microsoft remains the primary supplier and investor. And this simply reduces concentration risk for OpenAI. And I think it also provides a signal of both the maturation of OpenAI as a company, but also strategic intent. And I would say that intent is clearly now to identify ways to control the entire vertical stack of AI, along with this horizontal diversification of cloud.
I mean, it's really so powerful to think of all the deals that OpenAI has made. Does it also, though, open up any risks for all of the players that are now sort of tangled up, happily or otherwise, with OpenAI?
Well, what I think we see when we try to balance is this, more of a potential boom or a bust. Mm-hmm. This deal in and of itself definitely tilts more towards the boom side. The ability to have access to more compute, which Sam has noted, is the real constraint. So I think what you look for is signals around what that demand actually looks like and how it translates into revenue and ROI for both OpenAI and the other companies that are using AI. But I think, again, I go back to this strategic intent, the ability for OpenAI to be a central player, where before they might have been seen as getting squeezed from NVIDIA and then the application players. I mean, now this is starting to look more like OpenAI is using the Apple playbook and really owning the entire vertical stack. So the ability to do the deals at the chip layer, now we're seeing orchestration and diversification with these data centers. And, I think next what we look for is for OpenAI to move up and do some exciting things at the application layer. And what all of this means is more control for OpenAI along all of these different layers, as well as increasing the margins by going after these different lines of business.
Really fascinating stuff. We're showing a stock chart here, and Oracle is down by about 1.5%. I mean, is that because the market's viewing them as a loser in all of this today?
I don't think that there are any losers yet. Clearly, Oracle has a lot happening right now, building out the Stargate data centers. And, that's going to require more energy. It's going to require more silicon. It's going to allow OpenAI to be able to do more with their models. And again, to be able to continue to move up that stack to the ultimate prize, which I believe is going to be the application layer. What we may be seeing is this moment where we saw the Apple App Store, right? I think what's really exciting is preparing for the demand as well as being ready for all of these wonderful applications that I think we're going to see at the application layer.
How long do you think OpenAI can continue as a private company? I mean, at some point, is it going to have to go public for the capital needs?
Well, when we think about where all the sources of capital are to fuel these, what could potentially be well over $1 trillion in the data center build out, we start to run out of deep pocket private investors. There's only but so much private capital when you start to go out to the different regions. You go to the Gulf states, the Middle East. I think next will be a lot of the crossover investors like the Wellingtons of the world. And those are really the signs when a company is preparing to cross over into the public markets. I think Sam has even said he's very excited for the public to have access to be able to own OpenAI shares. And at the end of the day, I think we're looking at a multi-trillion-dollar market cap company, and it probably will be the biggest IPO that we will have ever seen.
That's exactly.
All right, we got a news alert on NVIDIA. Let's go to Eamon Javers in D.C. with that. Eamon, what do you got?
Yeah, Brian, we've got some new reporting here from the Wall Street Journal. Just within the past half hour or so, the Wall Street Journal reporting on some of the context behind President Trump's meeting with Xi Jinping in Asia last week. The Journal reporting, this according to them, that the president wanted to talk to his top aides just before the meeting with Xi Jinping about the idea of allowing exports of top NVIDIA chips to China. And the president was met with some opposition to even discussing that with the Chinese side. The opposition, according to the Journal, coming from Secretary of State Marco Rubio in particular, but also U.S. Trade Representative Jameson Greer and also Howard Lutnick at Commerce, all, according to the Journal, standing opposed to this push by NVIDIA to allow exports of the top chips, or at least second-ranking chips to the Chinese side on national security grounds. We have a statement here now from the White House. They're giving us the same statement that they gave to the Wall Street Journal, which is in their story. They say President Trump listens to a variety of insights on policy matters, including from top business leaders. President Trump's historic meeting with President Xi proves, however, that the only factor guiding his decision-making is the best interests of the American people. That, according to a White House spokesman. So, Brian, what you have here is some emerging details of the context around what we all noticed at that meeting, which is that the president didn't offer a concession on new sales of sophisticated chips to the Chinese side. Now the Wall Street Journal explaining that part of the reason for that is this sort of united front of opposition from the Secretary of State, the Secretary of Commerce, and the U.S. Trade Representative.
So kind of the idea basically that even though Jensen Huang is being very, very nice to Trump, in fact, using some of Trump's own language last week, right now it doesn't appear to be helping?
It doesn't appear to have solved the problem from Jensen Huang's perspective, right? I mean, Jensen Huang has been embarked on a very public lobbying campaign. He's gone to a lot of Trump events. He's, as you say, using Trump language. He's showed up at the White House quite a bit, is in contact with President Trump quite a bit, from what we understand. Clearly, what he wants is to be able to sell as many chips as he can into that Chinese market, which is enormous and super valuable for NVIDIA. The question from a U.S. national security perspective is that the right thing for the country or not? And the president appears to have decided, at least at this meeting, that he wasn't going to discuss it with Xi Jinping. And so that's a dead letter for now. But it doesn't feel to me, Brian, this is just an instinctive thing. It doesn't feel to me like this is over, though, at this point.
I don't know if anything's over. Eamon Javers, really appreciate the breaking news on NVIDIA. NVIDIA stock, by the way, still up. Eamon.
So even though only Meta stock sold off hard on heightened AI spending, the truth is everybody's doing it. This morning, Ben writes to seize that brilliant tech head and analyst out of Melius Research that I often quote. He put out a note saying that 2025 CapEx estimates for the top four hyperscalers, the four companies I just mentioned, had risen 6% after last week. And he raised his 2026 CapEx estimates for these four companies from $403 billion up to $486 billion. That's nation state money. Hey, throw in Oracle and CoreWeave, two more major data center builders. And now he's expecting $551 billion in capital expenditures next year and $733 billion in 2027. Again, that's just six companies. That's not even including OpenAI or Elon Musk's XAI, which is going to go through a lot of money itself. How do you play it? Okay, look, the most obvious answer is the same thing I've been saying for years. You just buy the stock of NVIDIA. The lion's share of this spending bonanza will go to hardware. Last week, NVIDIA held a very bullish GTC event in Washington, D.C., where CEO Jensen Huang said he has, quote, visibility into a more than $500 billion, end quote, cumulative revenue from the company's current AI chips. That's the next generation Vera Rubin chips and all the associated networking equipment. There's a reason NVIDIA shot up nearly 9% last week and it rallied another 2% today. And that's without any hope of Chinese sales, which were never in the numbers anyway.
All right, I hope you're all doing great today. I'm going to start by covering today's NVIDIA news. Then I'm going to talk about iron. Then I'm going to talk about MP materials. And then I'll talk some more about NVIDIA after that. So today, it's being reported that OpenAI has struck a $38 billion compute deal with AWS. Under the deal, OpenAI will immediately start using hundreds of thousands of NVIDIA GPUs in the US with plans to expand capacity in the coming years. The first phase of the deal will use existing AWS data centers, and Amazon will build out additional infrastructure for OpenAI later on. Today, we also learned that Microsoft has obtained export licenses from the Commerce Department to ship 60,000 NVIDIA GPUs to the UAE. And Microsoft also announced two deals today, a multi-billion-dollar deal with Lambda to deploy tens of thousands of NVIDIA GPUs, and a $9.7 billion deal with Iron. I didn't talk much about Iron last week because we had so much going on last week with GTC hyperscaler earnings, NVIDIA China headlines, and the NVIDIA news out of South Korea. But with the exception of last week, I have been pounding the table on Iron since early September. As I discussed in many videos, I thought it was only a matter of time before Iron would start announcing large deals with major hyperscalers. And today, today is the first of those deals. I would not be surprised if Iron announces other large-scale deals over the next couple of years with some of the other hyperscalers. That is not the sole reason why I'm bullish on Iron, but it does provide potential additional upside to what I think is already a solid fundamental setup. Under the Microsoft deal that was announced today, Iron will provide Microsoft with access to NVIDIA GB300 GPUs over a 5-year term for approximately $9.7 billion. Microsoft has paid 20% of that, so about $1.94 billion, to Iron as a prepayment. There are two important points that we learned from this deal that I want you to notice. First, this deal is only for 200 megawatts. Iron has a pipeline of roughly 3 gigawatts, meaning that this $9.7 billion deal is less than 10% of Iron's overall footprint. Why is this important? Because it means that there is plenty of room for expansion even after this deal with Microsoft. And the second thing I want you to notice is that Iron will be expanding capacity at their Childress site in Texas. We already knew that Iron was constructing the Horizon 1 and Horizon 2 data centers at their Childress site, with each data center being 50 megawatts. And with today's announcement, we learned that Iron is going to expand capacity at their Childress site with 2 more data centers, Horizon 3 and 4, which would bring the total capacity up to 300 megawatts. And beyond that, they have the potential to scale the Childress site even further to its full 750 megawatt capacity. This means that later on, as Iron scales this site, it is possible that we could see the Microsoft deal that was announced today get upsized later on as Iron builds out more liquid cooled capacity. Here is the moral of the story, and I don't want you to miss this. For right now, Iron will most likely sell whatever capacity they can produce as the world is severely compute constrained and constrained on power. And that will likely continue for at least the next couple years. Today's deal with Microsoft is another proof point of the overwhelming demand. And one more thing on today's Microsoft deal. Iron is guiding for 85% EBITDA margins on the deal, and co-CEO Dan Roberts said in an interview today that a lot of that will fall straight to the bottom line. That is very good news. I continue to be bullish on Iron for at least the next 1 to 2 years. Iron reports earnings this Thursday after market close, so be prepared for that. I am bullish on this company over the next 1 to 2 years, and I think there is material upside over that time regardless of how the stock trades in the short term. I seriously encourage you to research Iron. Very briefly, I'll mention MP Materials as well, because they also report earnings this Thursday. I continue to be bullish on MP over the next 5 to 10 years. We need to acknowledge that unfortunately MP stock is being used by market participants in the short term as a vehicle to trade off of US-China trade headlines. When trade tensions rise, the stock moves higher. When trade tensions cool, the stock moves lower. Please hear me well. I am bullish on MP long-term regardless of what the stock does in the short term, and we are seeing irrational short-term moves in the stock based on trade headlines. The trade headlines do not change the fact that the U.S. is doubling down on domestic rare earth production. Trade headlines do not change the fact that MP will have unlimited demand for their product when their 10X facility begins commissioning in late 2028. And trade headlines do not change the fact that the price floor commitment went into effect at the start of Q4 and will likely result in MP being a profitable company in the years ahead. None of that has changed. Now, what am I looking for in this earnings report on Thursday? I want an update on NdPr production. I want an update on metal deliveries. And I want to know if MP is still on track to start magnet production at their Independence facility by the end of 2025, as they previously guided. On this earnings report, MP's guidance for next quarter NdPr production will be more important than usual because the price floor commitment went into effect at the start of Q4. As a reminder, under the price floor commitment, MP will get at least $110 for every kilogram of NdPr that they sell, stockpile, or use internally. MP will sell NdPr at the normal market price, and the U.S. government will make a payment to MP to make up the difference, so that MP always gets at least $110 in revenue for every kilogram of NdPr. Moving forward, MP will be a fundamentally different company as a result, and they have the opportunity to be profitable in the years ahead. MP told us previously that they expect to receive the first payment from the U.S. government in Q1 of 2026, and so guidance for next quarter NdPr production will be very important on this earnings report. I continue to be bullish on MP for at least the next 5 to 10 years, and I'm viewing this as a long-term investment regardless of what the stock does in the short term. Now let's get back to NVIDIA. I'm sorry if I sound like a broken record, but I continue to think that NVIDIA's long-term growth is being underestimated by most analysts. It's not a coincidence that there have been many NVIDIA price target upgrades over the past few trading days. I don't put too much weight behind analyst price targets, but I mention the multiple price target upgrades because it reaffirms what I've been saying for months. Most analysts' long-term estimates are simply too low given what's ahead for NVIDIA. The world is severely compute constrained, and that will likely continue for at least the next few years. This is fundamentally different from the dot-com bubble, as I've explained in previous videos. This AI revolution is not a massive build-out of supply without demand. Rather, it is a massive wave of demand from paying customers in the face of severe lack of supply. That is not a bubble. Of course, I expect NVIDIA's data center business to continue growing strong, but I don't think adequate attention is being given to some of NVIDIA's other business segments, especially physical AI. Physical AI is going to fundamentally transform society. I think it will result in the development of many new use cases and is going to drastically increase the need for more compute and for NVIDIA's other products. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world, even when they are not connected to a data center. I want you to realize that NVIDIA is taking a holistic platform approach to physical AI, and they're establishing themselves as the underlying foundation supporting all of it. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. For now, we are on the cusp of agentic AI being introduced to the general public, and I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. I'm even more confident in saying that after Jensen Huang's comments about agentic AI, both on NVIDIA's last earnings call and his GTC keynote, as well as Amazon CEO Andy Jassy speaking at length about his optimism around agentic AI on Amazon's earnings call. I think the surge in compute demand fueled by agentic AI will be similar to the surge in demand we saw following the introduction of advanced reasoning models and inference. And I think the next major surge in compute demand after that will likely be fueled by physical AI. NVIDIA also has multiple other large long-term growth opportunities, including quantum GPU supercomputing, sovereign AI, enterprise AI, and many AI-native startups. Each of these opportunities and customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.